Imagine two people walk into the same bank on the same Tuesday morning. One has $100 in their pocket. The other has $1 million. They both smile at the teller. They both fill out the same forms. They both walk through the same glass doors. But here is the thing nobody tells you. From the moment those two people sit down, the bank treats them like they live on completely different planets. And the wild part? That gap does not start at $1 million. It starts way, way earlier than that. Most people just never find out because the bank never tells them. Today, we are going inside that hidden world. We are going to break down exactly what happens to your money at $100, at $10,000, at $100,000, and yes, at $1 million. Because once you understand how banks actually think about your money, you will never look at your account the same way again. Let's start at the bottom. $100. You deposit $100 into a checking account. The bank smiles. They say thank you. And then, here is what actually happens behind the scenes. Your bank takes that $100, and under a system called fractional reserve banking, they are legally allowed to lend out a large portion of it to someone else. Let's say they keep $10 on hand and lend out $90. That $90 earns them interest, maybe 6 or 7% per year on a personal loan. So your $100 is already making money for the bank, not for you, for them. What do you get? A savings account might pay you 0.5%. On $100, that is 50 cents a year. The bank is earning $6 on your money. You are earning 50 cents. That is the deal most people are in right now, and most people have no idea. Now let's talk about what the bank is actually doing with billions of dollars in deposits every single day. Banks do not just hold cash, they invest it. They buy government bonds, corporate bonds, mortgage-backed securities. They make car loans, business loans, and home loans. Your deposit is not sitting in a vault with your name on it. It is moving. It is working. It is generating profit for someone else while it waits for you to use it. This is not illegal. This is not evil. This is just how modern banking works. But here is the key insight. The more money you have deposited, the more leverage the bank gets. And the more leverage they get from your money, the more they start treating you differently. Let us move up. $10,000. At $10,000, something subtle shifts. You start qualifying for things. A high-yield savings account that actually pays 2 or 3% instead of 0.5%. A small reduction in monthly fees. Maybe a slightly better interest rate if you apply for a loan. Nothing dramatic. But the bank is starting to notice you exist. At this level, your money is still doing the same thing. Being lent out, being invested. But now you are inside a slightly different tier. Banks track these tiers internally. They have codes for different customer levels. Some call them bronze, silver, gold. The labels vary, but the system is the same everywhere. Now here is where it starts getting interesting. $50,000. At $50,000 in deposits, many banks quietly move you into what they call a preferred or priority customer category. You may get a personal banker, someone with an actual name and a direct phone number. Not a call center, not a robot. A real human who knows your account. You start getting better loan rates without having to ask. You get fee waivers. Sometimes you get early access to new financial products. And here is the part most people do not realize. Your customer profile inside the bank's system is literally flagged. Bankers can see your balance when you call, and that changes how quickly they solve your problems. One of the biggest secrets in banking is this. The bank's profitability on your relationship is tracked to the penny. They know exactly how much revenue you generate for them through interest spread, fees, and product usage. The higher that number, the better they treat you. It is not personal, it is algorithmic, but the effect is very personal. Now let us go to $100,000. This is a threshold that genuinely changes your banking experience in the United States. At $100,000, often called the six-figure tier, you start accessing what is commonly known as private banking light. Major banks like Chase, Bank of America, and Wells Fargo have specific programs that activate around this level. You get a dedicated advisor, not just for banking, but for investments too. They will show you products that the standard customer never sees. Treasury instruments, municipal bonds, structured notes, things that are technically available to everyone, but in practice only offered to people at this tier. Your mortgage rates can be negotiated, not just accepted. Your business loan conversations happen with actual decision makers. And when something goes wrong with your account, a fraud charge, a wire transfer issue, a hold on your funds, it gets resolved hours faster than it would for the person with $100. Why? Because the bank has a business reason to keep you happy. You are a profitable relationship. They do not want to lose you to a competitor. And now, the million-dollar world. At $1 million in deposits or investable assets, you leave the ordinary bank branch entirely. You enter private banking. Private banking is a completely different universe. It is not advertised on billboards. There is no walk-in appointment. It is invitation-based at many institutions. Banks like JP Morgan Private Bank, Citibank's Private Client, and Goldman Sachs Private Wealth Management handle clients at this level. Your dedicated private banker is not just a financial advisor. They are a relationship manager who coordinates across legal, tax, estate planning, and investment services, all on your behalf. You have access to things called alternative investments, private equity, hedge funds, real estate syndications. These are investment vehicles that legally require you to be what is called an accredited investor, meaning you have to prove a certain level of income or net worth just to participate. Your money is no longer sitting in a checking account earning 0.5%. It is being actively managed across multiple asset classes with a team of professionals watching market conditions for you in real time. But here is the twist that nobody talks about. Even at $1 million, the bank is still making significantly more from your money than they are paying you. The spread between what your money earns for the bank and what they give back to you narrows at higher tiers, yes. But it never disappears. The most sophisticated clients understand this. They do not rely on the bank to make them wealthy. They use the bank as a tool for liquidity, for credit, for access. But their real wealth building happens in assets the bank does not fully control. This brings us to the single most important insight in this entire video. The secret is not which tier you are in. The secret is understanding how the game is designed at every level. At $100, you are funding the bank's profit. At $10,000, you are starting to negotiate. At $100,000, you are inside a different system entirely. At $1 million, the system works hard to keep you inside it. Every single tier is designed to extract value from your money while giving you just enough benefit to stay. The higher you go, the better the deal gets. But the deal is still in the bank's favor because that is literally how the business model works. So what do you do with this? First, understand your tier. Look at what your bank actually offers you based on your current balance. Are you leaving benefits on the table? Are you in an account that charges fees that a higher balance would eliminate? Second, know the thresholds. In most major US banks, $50,000 and $100,000 are real inflection points. If you are close to those numbers, there may be a tangible financial reason to consolidate accounts and hit that tier. Third, remember that the bank is not your financial partner. They are a service provider. Treat them like one. Compare rates. Ask for better deals. Banks negotiate more than they let on, especially with customers who have options. And fourth, think beyond the bank. The people who truly build wealth are not the ones with the most in their bank account. They are the ones who move money out of low-yield banking products and into assets that work harder. Real estate, index funds, business equity, these are where long-term wealth actually lives. The bank is a starting point, not a destination. Whether you have $100 right now or you are working toward your first $100,000, the moment you understand how this system works, you stop being a passive participant. You become someone who uses the system intentionally. And that shift in thinking, that is where it all starts.